Let me ask you something, and I want you to really think about this before you answer. Have you ever felt like there's a conversation happening? A very loud, very confident, very certain conversation, and you're standing just outside of it, not sure whether to walk in or walk away? That's exactly what crypto feels like for most people. On one side, you have people who will tell you it's the future, that it's going to change money, change the internet, change everything. On the other side, you have people who will tell you it's the biggest scam in history, that it's smoke and mirrors, built on greed and destined to collapse, and somewhere in the middle is the truth. The quiet, uncomfortable, rarely spoken truth that most people on both sides don't actually know what they're talking about, and that's exactly what this video is about. Not to tell you what to buy, not to tell you what to avoid, but to show you what's actually there. Behind the noise, behind the headlines, behind the hype. Stay with me until the end. Because what you're about to hear might be the most honest conversation about crypto you've ever had. To understand crypto, you have to go back to 2008, not because it's a history lesson, but because the moment you understand where this began, everything else starts to make sense. 2008 was not a good year. Banks were collapsing, people were losing their homes, their savings, their retirement funds, and the institutions that were supposed to protect them were the exact same institutions that had caused the problem. It was in this moment, this very specific moment of distrust and disillusionment, that a mysterious individual, operating under the name Satoshi Nakamoto, sent an email to a small group of cryptographers. The email described something that had never existed before, a form of digital currency that no government could control, no bank could manipulate, no single entity could own, a currency of the people, by the people, for the people. It was called Bitcoin, and on the surface, the idea was elegant, simple even. If you can't trust the institutions, build something that doesn't need them. A financial system that runs on mathematics, on computer code, on a network of millions of people, rather than on the promises of men in suits. And for a certain type of person, in that particular moment, that idea was revolutionary. Anarchists, libertarians, tech idealists, people who had watched the financial system fail in real time. They became the first believers. They spread the message. They mined the coins. They built the community. And slowly, quietly, Bitcoin began to grow, not because it was making people rich, at least not yet, but because it represented something, a belief that the old system was broken and that something better was possible. Now here's what's interesting, and this is the part that most people skip over. Bitcoin was never designed to make you wealthy. It was designed to replace the dollar, to be a currency, not an investment. Something you would use to buy groceries, pay rent, send money across borders, without fees, without banks, without permission from anyone. That was the original vision, and it was a genuinely interesting one. But something happened along the way, something that changed everything. And understanding what that something was is where the real education begins. Because the moment Bitcoin stopped being seen as a currency and started being seen as an investment, the entire nature of what crypto is and what it does shifted completely, and most people never stopped to notice. Here's a question worth sitting with. If you own something, but you never use it, is it still what it was designed to be? Because that's exactly what happened to Bitcoin. People stopped using it as money and started holding it, watching it, waiting for it to go up. And the moment that shift happened, Bitcoin became something entirely different. Not a currency, but a bet that tomorrow, someone else would pay more for it than you did today. And here's the uncomfortable truth about that. That's not an investment in the traditional sense. An investment produces something, A business generates revenue, a property generates rent, a bond generates interest. But Bitcoin, sitting in a digital wallet, produces nothing. Its value exists entirely because other people believe it has value, and the moment enough people stop believing, the value disappears. Now, I'm not saying that makes it worthless. I'm saying that makes it something very specific. Something that requires you to understand what you're actually doing before you do it. And most people, when they first encounter crypto, don't get that explanation. They get headlines. Bitcoin hits new all-time high. Early investor turns $1,000 into $1 million, and those headlines do something very powerful to the human brain. They trigger a very old, very primal fear, the fear of missing out. And that fear, quiet as it is one of the most powerful forces in financial history. It has driven people into bad decisions for centuries. Tulip bulbs in the 1600s, railway stocks in the 1800s, dot-com companies in the 1990s. Every generation has its version of this story. A new thing appears. People get rich early, others rush in, prices rise, more people rush in, prices rise further, until one day, they don't. Now, crypto may or may not follow that exact pattern. That's not what this video is here to tell you. What it is here to tell you is that understanding the pattern is the first step toward making decisions that aren't driven by fear or greed or the desperate hope that this time it's different. Because sometimes it is different, and sometimes it isn't. And the difference between those two outcomes has very little to do with luck, and everything to do with understanding what you're actually looking at. So let's look at it clearly, honestly, without the noise. Because behind all of the headlines and the hype, there are some genuinely important things happening, things that deserve a clear-eyed examination, not cheerleading, not dismissal, just understanding. Let's talk about what crypto actually is. Not what people say it is, not what the headlines tell you it is, what it actually is. At its core, cryptocurrency is a database, a very specific type of database called a blockchain. And here's the simplest way to understand it. Imagine a spreadsheet that records every transaction ever made, who sent what, to whom, and when. Now imagine that spreadsheet isn't stored in one place. It's copied simultaneously across thousands of computers around the world. And every time a new transaction happens, every single copy updates at the same time. So there's no central server, no headquarters, no single point of failure, no one person or institution that can alter the records. That's the blockchain. And it's a genuinely interesting piece of technology. The problem is that interesting technologies doesn't automatically mean revolutionary application. And this is where the story gets complicated. Because what happened after Bitcoin was that thousands of people looked at this technology and started asking a very specific question: what else can we do with this? And the answers that came back were sometimes fascinating, sometimes absurd, and sometimes somewhere in between. People started creating new cryptocurrencies, hundreds of them, then thousands of them. Each one promising to solve a different problem. Each one backed by a white paper, a roadmap, a team of developers, and each one requiring you to buy their particular token in order to participate. Now, some of these projects were genuine attempts to build something useful. Others were less genuine. And the challenge for most people looking in from the outside was that it was very difficult to tell the difference. Because in the world of crypto, everything sounds revolutionary. Everything is described in the same breathless language: decentralized, trustless, permissionless, immutable. These are real words with real meanings, but when every project uses them, they start to lose their signal. They become part of the noise, and the noise, as we've established, is very loud. There's something else worth understanding here. The people building these projects, They had a very real incentive to make them sound as revolutionary as possible, because the more revolutionary something sounds, the more people buy into it. And the more people buy into it, the more valuable the tokens become, and the more valuable the tokens become, the more the early participants profit. This isn't a conspiracy, it's just how incentives work. And understanding incentives is one of the most important financial skills a person can develop, because once you understand what someone gains from telling you something, you start listening very differently to what they say. And in the world of crypto, almost everyone has something to gain. Here's something that rarely makes it into the conversation about crypto. The people who made the most money from it weren't the people who believed in it the most. They were the people who understood it the earliest. And there's a very important difference between those two things. Believing in something and understanding something are not the same thing. A believer sees the potential, feels the excitement, imagines the future, and buys in, hoping that future arrives. Someone who understands sees the same thing, but they also see the structure beneath it. Who benefits from this? Who profits if more people buy in? What happens if the enthusiasm fades? And what would I need to know to make a decision I could actually defend? These are different questions, and they lead to very different outcomes. See, when Bitcoin was trading for pennies, the people who bought it weren't doing so because they saw a financial opportunity. They were doing so because they believed in the idea of a currency outside the control of governments and banks. But as the price rose, a different kind of buyer entered the space, not idealists, but opportunists. People who had no particular interest in the technology, but a very clear interest in what was happening to the price. And these new buyers, by simply showing up and buying, pushed the price higher, which attracted more buyers, which pushed the price higher still, which attracted media attention, which attracted more buyers, and on it went, until the price was so high and the story was so loud that ordinary people who had never thought about crypto before, started hearing about it at dinner tables, in offices, from neighbors and colleagues. People who had bought early were now rich. And the question on everyone's mind was the same. Is it too late? Should I get in? What am I missing? And here's where it gets really interesting. Because the honest answer to those questions depends entirely on what you think crypto actually is. If you believe it's a currency, a new form of money that will eventually replace the old system, then no, it's probably not too late, because currencies don't have finish lines. But if you believe it's primarily a speculative asset, something whose value is driven by belief and momentum rather than underlying utility, then the question of timing becomes everything. And timing, as any honest investor will tell you, is one of the hardest things in the world to get right, consistently, over time. The people who made fortunes in crypto, by and large, made them by being early and by having the discipline to exit before everyone else did. That's not a skill that comes from enthusiasm. It comes from understanding, from asking the questions that most people are too caught up in the excitement to ask. And those questions are the same questions that apply to every financial decision you will ever make. Not just crypto, every single one. What am I actually buying? Who benefits if I buy it? What would have to be true for this to work out? And what happens if it doesn't? These aren't pessimistic questions. They're protective ones. The kind that separate the people who build wealth from the people who chase it. And there's something else worth understanding here. Something that rarely gets mentioned in the conversations about crypto. The emotional cycle that almost every person goes through. When they first encounter it, it starts with curiosity. You hear about it, you start reading, you start watching, and at some point, curiosity turns into excitement because the numbers are compelling, the stories are compelling, the idea that you could have gotten in early and changed your financial life, that idea is very hard to ignore. And then excitement, if you're not careful, turns into urgency. The feeling that you need to act now, that every day you wait is a day you're falling behind, that the window is closing, and urgency in financial decisions is almost always dangerous. Because urgency bypasses the part of your brain that asks questions. It goes straight to action, and action without understanding is how most people end up on the wrong side of a financial story. The antidote to urgency is patience. Not the passive patience of someone who is simply waiting, but the active patience of someone who is learning, who is asking questions, reading carefully, thinking slowly, and refusing to be rushed. That kind of patience is one of the rarest and most valuable things in the world of finance, and it is entirely within your control. There's a pattern that repeats itself in the world of crypto, and once you see it, you really can't unsee it. Every few years, a new idea emerges. It arrives with a new name, a new set of promises, a new wave of excitement. And for a moment, it feels like this time, it's genuinely different. This time, the use case is real. This time, the technology is mature enough. This time, the mainstream adoption is just around the corner. You saw it with Bitcoin, then with the explosion of new cryptocurrencies in 2017, then with NFTs, then with the promise of Web3, each wave bigger than the last, each one attracting more money, more attention, more ordinary people, and each one, eventually, followed by a crash. That left a lot of those ordinary people holding assets worth a fraction of what they paid. Now, is that the whole story? No, because each wave also left something behind. Technology that improved, infrastructure that was built, ideas that were tested, refined, and in some cases, abandoned for good reason. And this is the part that gets lost in both extremes of the conversation. The people who say crypto is the future tend to focus only on the potential. The people who say crypto is a scam tend to focus only on the failures. The truth, as it usually does, lives somewhere in between. Here's what we actually know. The blockchain technology that underpins crypto is real. It does what it says it does. It creates a transparent, immutable record of transactions. That's not hype, that's fact. What is less clear is whether that technology solves problems that couldn't be solved more simply, more cheaply, in other ways. Because here's the thing about revolutionary technology. It doesn't just have to work. It has to work better than what already exists. And for most of the use cases that have been proposed for blockchain, that's still an open question, one that hasn't been answered, despite years of trying. Then there's the question of crypto as an asset. And here, the honest answer is uncomfortable, because the honest answer is, we don't know. We don't know if Bitcoin will be worth more in 10 years than it is today. We don't know if it will be worth less. We don't know if a better technology will emerge and make it obsolete. We don't know if regulation will change the landscape entirely. And anyone who tells you they do know is either lying to you or lying to themselves. What we do know is that the history of crypto is full of people who are absolutely certain and absolutely wrong on both sides. The person who sold their Bitcoin at $100, certain it would collapse, and the person who bought it at $60,000, certain it would keep rising. Both of them were certain. Neither of them was right. And this is perhaps the most important lesson that crypto has to teach. Not about technology, not about finance, but about certainty itself. In a world that is moving faster than any of us can fully comprehend, certainty is a very dangerous thing to sell, and an even more dangerous thing to buy. So where does that leave you? After everything we've talked about, after the origin story, the promises, the patterns, the uncomfortable truths, where does a thoughtful person, a person who takes their financial life seriously, land on all of this? I think the answer starts with a question, not the question most people ask, which is, should I buy crypto? But a different question, a more honest one. Do I understand what I would be doing if I did? Because that question, simple as it sounds, changes everything. It moves you out of the emotional space where decisions are driven by fear and excitement and into a clearer space where decisions are driven by understanding. And in that clearer space, a few things become obvious. The first is that crypto is not one thing, it's a category containing thousands of different projects with different technologies, different purposes, different levels of legitimacy. Treating crypto as a single entity is like treating the entire stock market as a single entity. It misses almost everything that matters. The second is that your relationship with risk is personal. What makes sense for one person may make no sense for another. Someone who is 30 years old with stable income and a high tolerance for volatility is in a completely different position than someone who is 55, approaching retirement, and cannot afford to lose what they've built. Neither of them is right or wrong. They're just different. And any conversation about crypto that doesn't account for that difference is incomplete. The third is that the noise never stops. The people who profit from your enthusiasm will always find new ways to generate it. New coins, new projects, new narratives, new reasons why this time is different. And the only defense against that noise is your own understanding, not someone else's opinion, not a headline, not a YouTube comment. Your own, hard-won, carefully considered understanding. And if you've stayed with me this far, I want to say something directly to you, because it means something that you're still here. It means you're not looking for someone to tell you what to do. You're looking for the tools to figure it out yourself. And that is exactly the kind of thinking that builds real financial security. Not following the crowd, not chasing what's hot, but understanding what you're doing and why. So if this channel is the kind of conversation you want more of, I'd invite you to subscribe, not because of a number, but because every week, we sit down and have exactly this kind of conversation about money, about wealth, about the decisions that quietly shape your financial life. Hit subscribe and stay in this conversation with us. Now, back to where we were. Because there's one more thing I want to leave you with. Something that I think applies far beyond crypto. We live in a world that is desperate for certainty, that rewards confidence, punishes doubt, and mistakes loudness for knowledge. And in that world, the most valuable thing you can cultivate is the ability to sit with uncertainty, to say, I don't know, and keep thinking anyway. To resist the pull of the easy answer, the exciting narrative, the promise that feels too good to be true. Because the things that feel too good to be true usually are. Not always, but usually. And the filter between usually and always is understanding. Real understanding, not borrowed conviction. Not someone else's certainty transplanted into your mind. Your own, carefully examined, honestly arrived at understanding. That's what protects you. In crypto, in investing, in every financial decision you will ever face. Not the right tip, not the perfect timing, not the inside track. Just understanding, quiet, patient, hard-won understanding. Somewhere right now, someone is staring at a screen, watching a number go up, and feeling something that is very hard to describe. It's not quite excitement, and it's not quite fear. It's somewhere in between. That particular mix of hope and anxiety that comes from having something at stake, from having made a decision and not yet knowing if it was the right one, and somewhere else. Right now, someone is staring at a different screen, watching a different number, and feeling the opposite. The quiet devastation of watching something you believed in lose its value, slowly, then quickly. Both of these people made decisions, Decisions that felt reasonable at the time, decisions that were probably influenced by something they read or heard or saw, by someone who seemed very confident, very knowledgeable, very certain, and the difference between their outcomes had very little to do with intelligence and everything to do with timing and context and luck and understanding. This is what the world of crypto teaches you if you let it. Not which coin to buy, not when to sell, but something much more fundamental, that financial decisions made from excitement rarely end well. That financial decisions made from fear rarely end well either. That the sweet spot, the place where good decisions tend to live, is in the quiet space between those two extremes, where you can see clearly, think carefully, and act deliberately, not because someone told you to, but because you understood enough to decide for yourself. Crypto will continue to evolve. New projects will emerge, old ones will fade, prices will rise and fall, regulations will change, narratives will shift, and through all of it, the noise will remain loud, confident, certain, and mostly unhelpful. What will always matter more than the noise is your ability to think through it, to ask the questions that others aren't asking, to sit with the discomfort of not knowing long enough to actually learn something. Because that discomfort, that willingness to stay in the uncertainty, is where real financial wisdom comes from. Not from a hot tip, not from a viral video, not from someone who got lucky and now speaks with the authority of the inevitable. From the slow, careful, honest work of understanding, and that work is always worth doing, no matter what the market is doing, no matter what the headlines say, no matter how loud the conversation gets. The work of understanding is always worth doing. This video is for educational purposes only. Nothing you heard here is financial advice. Every decision about money, about crypto, about any asset, is yours to make based on your own research, your own situation, your own judgment. That's not a disclaimer. That's the whole point. If this conversation meant something to you, share it with 5 people who need to hear it. Not because it's a video, but because honest conversations about money are rare, and the people in your life deserve to have access to them. Subscribe to the channel, because this conversation continues every week. And leave a comment below. Tell me honestly, what is your relationship with crypto right now? Are you in? Are you out? Or are you still trying to figure out what you actually think? Because this channel exists for exactly that kind of honest reflection, and the next video is already waiting. And that patience is not something you are born with, it is something you build. One careful decision at a time, one honest question at a time, one moment of choosing understanding over urgency at a time, and that is always worth doing, no matter where you are in your financial journey. No matter what the market is telling you today, the work is always worth doing, and so are you. Starting today, starting now. Starting with this conversation, the next step is yours. It always has been, and it always will be, because the person who understands always outlasts the person who simply believes. And now you understand a little more than you did before.